this is tough territory for the government.
It really is, but I think the message for the government, and remember that Jim Chalmers was worried about not only this decision from the Reserve Bank, but also the inflation number that came out last Wednesday. And Michelle Bullock today indicated that she was herself concerned about that number because monthly data leading into that had been high, and had it been as high as what many feared, then inevitably there would have been a rate rise today. Now, that's the reason why Jim Chalmers got out and really softened up parts of the media in the previous week, effectively saying, look, we believe we're on track. We believe that inflation will zigzag, but is on the right path. Now, ultimately, as we say, it was the volatility in the global markets that probably, cemented in the decision today. But looking out into the future, and I'll give you one little example, is that there's a great quote that really the Reserve Bank came out with today, which I just want to give it to you because it is really good. Previously, in the June statement, it said inflation is easing, but has been doing so more slowly than previously expected, and it remains too high. This time around, the statement changed, and it simply says inflation in underlying terms remains too high. So in other words, it toughened up its language around inflation. It toughened up its language around the prospect for interest rate rises into the future. So, this is a central bank that really is saying to the government, is saying to the community, again, interest rate cuts are not on the agenda, but be very careful because we think with the settings as they are now, the prospect for a rate rise is still very much alive.
All right, yesterday we had $100 billion wiped off the ASX. That was pretty much mirrored around the world, particularly the US and Japan, obviously, but the epicentre is the US. All this talk about a recession or fear of a recession, which can often be just as bad for markets. Give us your take on where things are headed.
Well, where things are headed is incredible volatility is likely to keep on coming. That was one number where it showed unemployment rising in the United States. And the fear is, same as here. Lots of people now feeling comfortable. They've got jobs. At the edges, people really don't like the fact that interest rates have stayed as high as they have. They don't like the fact that their prices have stayed as high as they have. But while they've got jobs, they can and will manage in the main. But the reality is that if interest rates keep rising, or indeed if people start losing jobs, that is a fundamental problem. The Reserve Bank sort of highlighted that. Now, this is a reason why markets really fell apart in the United States, and that was picked up all over the world, including in Asia in particular. But today, things calmed down, mainly because the US markets were much calmer than anticipated. So overnight, they were stronger. Tonight, they're going to be stronger again. And the fact is that even though the US markets and NASDAQ and the Dow Jones all fell around about 3%, the futures markets pointing forward were better. That brought a sense of calm over our market today, which was marginally stronger. It brought a sense of calm over the Asian markets, which rebounded from falls yesterday. And so, as I say, you might think this is a flash in the pan, but it really serves as a reminder of the fragility of economic markets right now.
Very comprehensive. Thank you, Ross, as always.